Welcome back to Purdue University for our College Roadshow this weekend. Excited for our ag economists that are on the panel today. A lot of things to talk about. But Jim, let's first talk about the most pressing topic for a lot of folks watching. That's USDA's next big report that we're going to see out on Monday. As you look at kind of how USDA could change yields and forecasts for supply and demand, what do you think is the most pressing topic that we need to be watching out of Monday's report?
Well, this report is going to be huge with respect to yield. I think a lot of people are expecting the corn yield number to come down. The question is going to be how much. There's some estimates out there that are, I'd say, shockingly low. But most people, I think that the trade's probably expecting a reduction in supply that's probably going to amount to about 250 to maybe 275 billion bushels, which will tighten things up quite a bit. And so it'll be interesting to see if that materializes. On the soybean side, there's probably more of a question mark there because of the impact of some late season rains and what's going to happen with respect to yield. Most people, I think, are looking for the yield on soybeans to stay about the same or maybe come down just a little. So probably not a big change on the supply-demand balance sheet for soybeans, but maybe a bigger change on the corn side. And that, just further tightens a situation that's already pretty tight coming in.
Yeah, and Todd, if we see that situation tighten a bit, and we do see commodity prices react, whether it's baked into the market now or not is another debate. But if we do see commodity prices react, we do see those remain elevated. What impact could we have on farmland prices as we move kind of through these key months this fall and into this winter?
Yeah, so farmland prices are really formed by the expectations for what we expect to earn it, and over sort of a longer period. So farmland prices usually don't respond to sort of short flashes in commodity markets, but it would give us some sign of like, are the good times here to stay for a while? At which point that kind of gets baked in. But this is also coming against sort of a rising interest rate environment, which is putting downward pressure on the land values. And so in order to kind of maintain the prices we've seen over the last year or so, we need to see returns at least stay stable, but preferably grow a bit.
Well, you mentioned that, but also when you look at inflation and the impact that that's having, Ariana, I mean, you look specifically at the CPI. Mm-hmm. Is it a true reflection of the inflation that consumers are seeing with the products that they are purchasing today?
So one of the things that it's happening is, well, the CPI is going to be reanalyzed. We think that inflation is a little bit higher actually than what we see on the stores. So that's something to think about. We know that retailers and food manufacturers are squishing margins, although they're very profitable. They're squishing margins, so we see that probably there's going to be a chance that we're going to see price increases for foods in grocery stores, and that's going to impact how consumers are going to react to what are they going to eat and how are they going to spend their money on things that they find necessary or not.
Is it just the raw price of commodities, or what else has been fueling this inflation that consumers are seeing?
Well, fuel prices. We know that gas prices have increased, although they have been stabilized in the past few months, or few weeks rather. Expectations, the food supply, how are the fuel changing how food is transported, and how is that going to influence the cost in the grocery store?
Jim, are we seeing any demand destruction either here domestically or abroad when you look at these elevated commodity prices, not only on the grain side, but also the meats?
I think the big concern with respect to both of those is going to be what happens to income levels in some of the importing countries. And then you've got an exacerbating factor with respect to exchange rates. But I think the headline story on exchange rates doesn't necessarily match up with what's going on in agriculture, because the headline story tends to focus on, for example, the US dollar versus the British pound or the euro. And those are not the major export markets for us. So it's really more important to think about what's happening with respect to the dollar versus the Mexican peso, the Japanese yen, and the Chinese currency. And that's a little different story. And you also have to look at how we're stacking up relative to our competitors. So it becomes a pretty complicated situation. But in some of those importing countries, we are probably starting to see some demand destruction, because those are some pretty high prices at the import gate level.
Yeah. All right, well, when you look at some of these income levels specifically for farmers, we are seeing cash rents rise rapidly. So Todd, when we come back, I want to get your take on where we could see those cash rents go. But first, we need to take a quick break here on US Farm Report.